Hello everyone, this is Roy, the founder of Olivon Investments Incorporated. You can visit our website at olivon.com. That's AALAVON.com. If you're on YouTube, I'll leave a link in the description. I just wanted to make a quick video and go over moving averages with you. That's these lines that you see on the chart here. The white line, that's the volume weighted average price, VWAP. I'll go over that in a different video. Right now we're looking at the green line, that's the 9. That orange line is the 20. This red one is the 50. And this purple one is the 200. And these change depending on what time frame you're in. For instance, right now we're on the 1 minute time frame. And let's see, if we go to the 5 minute time frame, you'll see, you'll see that it changes a little bit. And I'll go back to the 1 minute, so it's gonna get aggravating going back and forth. Okay, so for the 200, I would normally use the daily chart down here. It respects the 200 really well. The moving averages, they sort of act as like a support and resistance. What it is it breaks down the previous 200 time frames, like 200 candlesticks. So like for the minute one, it would be the past 200 minutes, and for the purple line, and then the green line would be the past 9, because I have it set up as the 9. The orange should be the previous 20, and the red would be the previous 50. And you could set these up however you wanted. Like you could do the 100 moving average, 150, 5, whatever you wanted to do. I just have the 9, the 20, the 50, and the 200 because those tend to be the most popular. That's what everybody's looking at. They tend to act as support and resistance. If you look, see how it kind of sort of wants to sit on top of that 9. See how it's sort of like it's sort of bouncing off it like that. Then bounced off the orange, the 20. So that would be resistance. It's support right now, and then when it breaks through it, then it acts as resistance. See, it doesn't quite want to come back up through there, and then when it finally decided it wanted to, it sort of wanted to sit back on top of it all over again. If the 9 and if two of them cross, it's like a reversal. Like trying to see if I can find an example where it does it here. It'll normally be a pretty. It's hard to tell from this chart here. Yeah, probably need to get on a different chart. Alright, give me just a second. Yeah, see how the green was on top here? This isn't the best example. The green was on top, that's the 9, and then once it switched over and it came on the bottom, then the stock started dropping. It was on its way up, and then it started dropping once they crossed over. That's what I mean by when they cross over, it's a reversal. The higher the relative volume is, the better it'll respect these lines. It works really good, on pretty much like the top 3 or 4 stocks of the day that everybody's looking at. You'd call them stocks that are in play. Most day traders, they have like we have like scanners that we go by. Like every day, it shows us, like before the bell even rings, before 9:30 even comes, they have what's called the pre-market, and some traders are already trading. And some of these stocks pop up on the scanners to where news or something's come out, and they've already been jumping up maybe 100, 200%. So they're already on our radar, and it's like everybody flocks to them, and the people trading them are people that really know what moving averages are. They have them pulled up on their screen, and they're paying attention to them, and because of all that, they work better from a technical perspective like this. Let's see. I think that's the gist of it. There's pretty much two types. There's the simple moving average, and there's the exponential moving average. The difference is the exponential weighs the most previous. What's happened most recently weighs more than like for instance on the 200. The past few candlesticks will carry a whole lot more weight than the first few, if that makes any more sense. So it's quicker. The exponential is quicker to react. Most day traders, it seems to respect it a little bit better. It'll be a little bit. The simple just doesn't pick up quite as. Everything takes a little bit longer to come back to it. But yeah, moving averages, they're kind of like magnets almost. Like the stock really wants to be where the moving averages are. Everything tends to sort of get sucked back into them. I mean, you could even say well, right now we'll look how far we are away from the 200. Let's buy here and just wait, and just wait till it eventually crosses back over and get out. Somebody might have just that simple of a strategy. So I think that's about it. Yeah. Once again, this is Roy from Olivon Investments. You can visit our website. There's much more videos for you to watch. Olivon.com. That's AALAVON.com.